There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Forex Factory Calendar. So forexfactory.com, always make sure you go in my opinion, and remove all events other than just red folders. This probably seems redundant to some, but we have a lot of new subscribers to start off the year. So my intent with these, both the Tuesday and Saturday, and obviously I run these at 10 a.m. Pacific time. That's different. It's 1 p.m. Eastern time, and obviously it's different than yours. Always make sure you're looking at the date here and that you have it synchronized with the time. Okay. So I say that a lot because I have run across just numerous, when you apply the filter and you just look at the red folders, numerous trade errors that have been based upon not knowing when the news is broken out because they don't have the time synced right. So don't necessarily pay attention to my time. Go look at Forex Factory Calendar, obviously, and have it live for your time, wherever you're located around the world, and make sure the times are synced with what's going on. So believe it or not, this could be a big risk management thing, because if it's not dialed in right, it just makes it difficult for, when the news stories breaks. So coming into Sunday, keep in mind, we've had, this is just a China forecast, but I'm just showing you how you can look at the forecast versus the actual as far as GDP. But we have a bank holiday on Monday. So this is national holiday. Stock exchange that closes Martin Luther King Day. I and my family are packing up our house for the movers to be showing up at the end of January. So Bank of Japan outlook on Tuesday, but that's tentative. I don't know when the release of that time is. Typically this thing comes out at night, Japan time. So looking at British pound CPI, this certainly be one to watch. The CPI is for everybody, really. So you can click on these boxes to see what the actual versus the forecast is. Governor Bailey is speaking. Should be interesting, certainly on Wednesday. We know that the British pound has been in a nice rally in relation to almost everything else that it pairs with. It's been strong. So it'd be interesting to see what what comes out of Governor Bailey and the central bank potential changes. Keep in mind that the reason we don't really trade around these times is, even though generally, I'm going to say plus 90% of the time, the notes are already disseminated on the news wires of what many of the governors, or in this case, the regional governors, in addition to the Chairman Powell, will be speaking. There's always the chance in any of these events from a Q&A perspective that something can pop up. So just be aware. So unemployment change down under on Friday. Charts. So you click on charts, finviz.com. Make sure it's on daily. Make sure you're looking at all. That way we could see correlations, as I often show this in broad comparisons. Let me make the screen a little bit larger. There we go. All right, so Dow, S&P, NASDAQ, Russell, this is the small caps. Tech's been weaker, okay? Important thing to note about tech, if you're holding a lot of tech, and I've met a couple of potential new clients that are completely over-levered in tech, this is a big deal as far as what's going on here. So with all that falling off and really bouncing off of a very, very important support line, do note that I would not be long of right? As Dennis Gartman says, I will not be long of NASDAQ-based stocks. If we break this line, we're probably going to waterfall down to the next area, which is right around 15,000 in the NASDAQ 100. Broad markets, don't pay attention to Dow. It's inefficient index, but the S&P 500, Russell, and certainly the European indexes, they are in much better shape than the small caps are. Okay, so VIX, a little bit of a spike going on last week, not too much. Continue rise in the heating oil space. That is due to multiple factors, including inflation, supply chain disruptions, all four. Metals going not much from last time I talked about metals. You can see all these moving down to the bond market because this is becoming increasingly important in this discussion. So look to see on Friday. Remember, each of these candles represents a single day, 30-year all the way down to the 2-year note. Decidedly weak across the board, right? So this doesn't bode well for bond funds because the price of bond funds, even though they're spinning off income in a varying degrees depending on maturity or duration, the price has been weak. And the important thing to understand with weak prices is that when price goes down in the bond market, yields go up. So for those looking to buy a house, typically, at least in this country here in the US, the 10-year note and sort of an aggregate of these and maybe slight other factors affecting the 10-year is dependent on mortgage rates. So mortgage rates have been spiking up as the 10-year has been dropping, which should put at least a little bit of a halt, depending on the state, on home sales. Could always be wrong, right? These are prevailing tailwinds that have exacerbated themselves in the last couple of days, because I should say the last quarter or two, because of the fact that with inflation, really the only way to curb any rampantness in that area generally, and this is a Keynesian type of view, is to raise interest rates, right? If yields are going up, I think the bond market is sort of anticipating maybe the Fed stepping in with a more formalized interest rate increase, maybe not necessarily an overnight or discount rates that banks use or the overnight lending rate, but they have other means in terms of their open market committee, in terms asset purchases, and or putting things back on the market. So as I illustrated last week, and I'd actually done this for a couple of clients, probably not the easiest to see because I'm not on camera right now, which should change when I get the studio set up in Florida in about a month. The last 12 years certainly have been accelerated in the most recent 6 of those 12. The Federal Reserve has essentially gone out into the marketplace and bought assets, right? So when they're out buying assets, whatever the assets may be, they're putting cash in primary dealers' accounts, right? This is an accommodative. This is a dovish. There's all kinds of terms for this. It's called quantitative easing. The complete opposite of that is them putting assets back on the marketplace, right? Think of all your neighbors in your neighborhood put all their houses up for sale at the same time. You had 60 houses go up for sale at the same time. What's going to happen to the price? Well, if you have a gluttony of supply hitting the marketplace, price is going to get down generally. Not always. Depends on a whole bunch of other factors, but generally just understand that's what's going on. So how does all this affect currency and why do I care, Steve? And how's it going to make me profits in my trading account? The key also to that is understanding the break that we saw. And I talked a lot about this in the dollar, and I'm just sticking with real basic charts at this point because I want to illustrate that dollar typically does not act well. Notice it took a while to sort of break the, I don't know, break the mold, if you will, and see how the support was right in this 95.67 area. Problem every time in Firefox you try and zoom out on these pictures, it makes them grainy. In any case, you can see the line of demarcation right here, right? It's right in this 95.50-ish area. We broke that decisively and just went boom right back down to the top of where we launched out of, right? So dollar was weak and generally everything else went up. So let's go back to our core chart analysis, go to the bottom. US dollar breaks, euro lifts. Japan had a very exaggerated move, which oftentimes is the case. So it's a complete reversal from the falling of the yen into Q4 of 21 into the rise of Q1 of 22. Same thing with pound. Surprisingly, pound did rip, dollar launched back. This is a what's called a zipper type of move, where you break a zone or you break some sort of support area. In this case, it was a bunch of other things. You'll usually trade all the way through the whole zone just to find buyers, because oftentimes in these types of empty pockets, you have notches that need to be filled as far as the auctioning process and price, right? Don't want to get too much more detailed into that, but just understand that's why I talk so much about when it cracks, I'm not standing in front of the freight train, right? I'm leaving the station at breakneck speed, hanging on to the caboose, right? So in this case, you're short the dollar, you're long have anything that was on the opposite side of that, right? Canadian dollar, euro, that type of thing. So let me take and jump back out. Let's go to charts themselves. I'm not going to get too much into the equities or bond space, but I did want to address at least a little more of a detailed analysis of DXY. Keep in mind, this is mostly Europe and Japanese based components that derive this index. We had, you can see in this dotted line that we're showing on the FinViz chart, somewhere right around 95.50. We broke through that and sold off into the region that currently we had support at. I think this line actually just showed up on Thursday, if I'm not mistaken. And boom, there's the line of support, which was also the breakout point of where we were, hit right on. So we could spend some time next week, depending upon a number of factors at place that the Fed does and comments to the marketplace. I mean, it's getting sort of, I don't know if you guys know what the game Jenga is. It's where you use all these different blocks to build essentially like almost like a tower, right? You pull enough pieces out of the Jenga puzzle, and it's beginning to look like the Leaning Tower of Pisa, right? So right now, many of these marketplaces that I felt have been built on central bank quantitative easing bricks that are deteriorating in our sort of Jenga tower right now, right? That as soon as these get slid out, it just makes the tower that much more shaky, right? And we can continue to pull bars out or bricks eroding in this tower for the next 3 years and it really not come tumbling down, right? There's no way to tell what black swan events can come out and just slap the market face across the the back of the head. But I see it. There's just too many tailwinds of stuff that's building. And I think there's going to be a coming to Jesus moment with a lot of these different asset prices out there, including real estate in different markets, maybe more exacerbated than others in terms of movement or the range. So, Euro rallied up to almost a complete opposite in terms of upside down, if you will, the DXY. So it rallied into this area, could spend some time under. So not only in this chart from a daily perspective, but certainly the DXY and a whole bunch of others. I mean, we're not necessarily the pound, but if you look at CAD, I mean, we're really near support points on certain ones. I think the surprising thing in all of this is how fast these reversals took place. Now, I mean, things can always go crazy in currency land. I get it, but it's like it almost reminds me of like everybody was like, oh yeah, I think the dollar's going to continue to rally, and then all of a sudden they're like, oh geez, we shouldn't be long, and then everybody just completely dives in and just throws in the towel, right? And that's typically the time you want to be doing the exact opposite. And that's very hard to do because it completely flies in the face of the fear and greed component of one's emotions that make up essentially your psyche, right? And I talk probably way too much about this, but I think it's critical. Even if you had 1/16th of the knowledge that I have on all of this in trading, or some of our traders. We've got a lot of good coaches in the Auvoria Prime community. But even if you had like maybe a tenth of all of their experience as a trader, but you had just fantastic control psychologically of your decision making process, you still can be a profitable trader. So that's why I continue to bring up things. And for those that didn't hear, we're sort of restarting. Let's see if I can find it. I've been so away from. Um, we're getting back into it here. Let me just show you this. Okay, here we go. Guess what's back? Our market watch. So here's the channel info. And since I don't really have anywhere to post this in terms of the, we're not broadcasting from a Zoom room. We're just using direct feed live broadcasting software. I figured at least I could show the channel information. I haven't had too much time to play around with this, but we'll get this all back in action here. I'm trying to find where the subscribe button is. Where's the view channel link thingy? Huh. In case, I'll be posting more stuff on this market watch. And I guess I probably should go in and post again. Actually, let me go in the channel here. I think I had 150 photos. So that's just this stuff, all right. Oh yeah, here. Actually, this is good. So some of this stuff's still up here, so that's good. So I haven't deleted it all. So we have all the chart patterns. Make sure you take a closer look at those if you've never seen them. Some of the inflation stuff, just some teachings on movements. This is actually a fantastic piece on understanding trade sizing, drawdown versus win rate. Most traders in our new CFA at First Down, he's going to be helping me out with portfolio stuff. I had to memorize this and then I quizzed him on it because this is based on trade size and client accounts. So this piece goes a little bit into how important psychology is that I wanted to show. So your trading methods are your plan, right? And then the risk management you have and the psychology, and with the overlapping areas of these is where your edge is. But I can tell you it's not necessarily the education. And I think the problem with the human mind is that it feels it can solve problems by gaining tons of knowledge. And generally that's true. But if you don't have the psychology to be able to handle the pressure of making those decisions, you're just as dangerous in trading as somebody that is um, just a gunslinger, right? So use the thought processes, and ideally you build the trading methods, you understand the risk management, you feel more comfortable psychologically, sort of building that inner monkey, right? And you're in, a cage or a room, if you want to envision yourself in this, and there's all kinds of things just hitting the room, just bombarding the room, right? Mortars, beer bottles, whatever you want to picture just coming at you, right? And you're just sitting in the middle of that room in a Zen position, right? I've actually seen this before. It's pretty effective. And so a lot of the meditation, I think that gets done to calm the mind down. I think the meditation should be focused on continuing. I use the horse blinder thing a lot. They put those things on the horses so they don't get caught up in other events around them and just focus on bolting down the track and winning the race in front of all the other horses, right? So this essentially is the way you should train your psychology to sort of think. The problem is that humans are designed and wired sort of incorrectly to trade effectively because the emotions get in the way. It has a tendency to put a cloud in front of that horse race, right? So for just a lack of a better analogy, or maybe if let's stick to my F1 analogies, you're racing around the track in your car and it's getting rainy, right? Or it's getting cloudy, or there's lightning bolts hitting the racetrack in front of you, or other drivers are crashing, right? This essentially is you. It's just, like those commercials in the old days. This is your brain on drugs, where they're frying an egg in the pan, right? But just focusing on driving down that track and all these other things that come at you doesn't even affect it. Yeah, obviously you're going to make slight changes in decisions based on, increasing or decreasing factors of risk, right? I should probably use the example of Lewis Hamilton, but if you're an F1 race fan and you're a Team Mercedes fan, you obviously know how well he has done. He is one of the few that I've ever come across in sports in any arena on this globe that just has absolute focus. I mean, just ridiculous amounts of focus. If I could be a quarter as good at laser focusing as Lewis Hamilton does, I think I'd be much better in everything I do, right? So use whoever your laser focused, person you look up to is, and imagine how many factors have come at them, right? So picture whatever analogy you want, and almost take yourself through an exercise, as I've been taught to do, of just stuff coming at you, right? So if you're on a trading floor and you're with, there's tons of movies you guys have seen that depict this, but you're on a trading floor and, stuff's flying around the office, the markets are crashing, right? Everybody's screaming, dudes are jumping out windows. I mean, it sounds like a terrible situation, but if you can completely be focused in that environment, it's going to help you a lot. It's going to reduce your risk dramatically. It's going to allow you to make decisions that are more focused to executing like a robot, right? So a lot of people ask, well, what types of people make up the best traders? And the answer is those that have been trained in some other area for mental focus, are very well adjusted to come into this business. Doesn't mean you have to be. Doesn't mean you can't train yourself to be, right? Where there's a will, there's a way. Absolutely applies to this business. But I think I spend way too much time on charts and not enough time talking about psychology. So I try hard with some of the presentations with our Ride the Wave event in July, or some of the other things we talk about and some of the events we'll be doing coming up. Um, I think you focus on more of just developing that killer psych move. So I'll put some more pieces back here. Room's getting up. We're cranking back up live. It is a one-way room because we can't really allow messaging. It just would turn into. But I'll tell you, I may have like the jury's sort of out on this, is like a market watch, like chat room, right? That I can jump in and make some comments on and so forth. So, but just know a lot of the groups are killing it on here. I think the Arrow group, which is a really strong membership, continues to post. I mean, just since yesterday, look at his 479 posts. So it's a very active room, and I encourage you to go in here. The only problem with a lot of this is that you're sifting through just tons of junk. You don't know what's correct. And if you're just looking at it from the standpoint of direction during a particular trade, that's fine. I wouldn't get mired in going through all of this chit chat stuff. And hopefully everybody in this room, because Jackie's pretty tough on everybody, is keeping it in line with just trading and not getting into any other crazy conversations, which again makes you lose focus and crash that car. So that is the room. What else do I want to talk about in Chartland? Take a quick look at crypto. So we broke through it, had some higher volumes, and we've kind of crept back. This is almost like that, a very weak dead cat bounce and pattern. I probably could see lower lows on crypto. Take a look at the gold space. Still stuck in that range. It's crazy. Crazy, crazy. It's actually interesting. Just figured this would have been the case. This is the PIMCO short maturity fund. Just do a reset the scale. I didn't see this last week. I think it dropped about 40 basis points. So a lot of that has to do with that interest rate. This is a place where a lot of money managers park cash. It's a really pretty decent fund. It pays about a 1.5% yield. It's called the Mint Fund. All right, what else? GBP NZD. Note that high I said was just been straight up in relation to the bond. And the NZ's just eating the lunch of the pound. AUD CAD I wanted to show. Still stuck in that long-term range down here at the bottom. GBP CAD, the neo currency, sitting on support right here, one spot about 7,100 area. Euro GBP, again, no surprise. Strength in the pound, weakness in euro. I think that's everything I wanted to cover. It really is kind of too bad that with our new streaming system, there's no way to sort of hook up like questions live. I feel like I'm talking to myself, whereas being in a room with people that could just contribute to the chat. But bear with us while we hook that up. I think that we finally have like an awesome F1 race car chassis base, right? And now we just need to build on to it all the other great stuff that I think can hook in with OBS. But I wish everyone a good trading week. May the trades be with you, and see you on Tuesday.
There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.